Well, welcome to a live recording episode of Insurance Gone Wild. We want to thank all of you all for watching and thank each and every one of you for being here. We really do appreciate it to have a live audience. I know we have more folks that are coming that are going to come and visit with us, and actually I'm pleasantly surprised. You had to get your seat because this place is going to be packed.
Yeah.
Hey, listen, we are at Dos Amores restaurant in Hurst, Texas today for this particular recording. And we have Jesús here, who is the manager, and we want to give a shout out, let you talk a little bit about Dos Amores and what you guys offer. I know it used to be another restaurant. It's been around forever. So tell us just a little bit about Dos Amores.
Yeah, so thank you again, guys, for having this here, for hosting this here. It's a way to start our first year anniversary here at Dos Amores, so we've been open finally for 1 year. And, it's been quite a challenge, a lot of changes, but overall, we've come a long way. And, just when we closed formerly Miguelitos, within 3 days, we reopened Dos Amores. And, it's been a roller coaster, but overall, we've had so many events, so many parties, and even we have a venue, and I've never seen that venue be rented so much in 1 year, even months. We have baby showers, quinceañeras, weddings, and other stuff. We even have vendor pop-ups, yoga on Saturday mornings. We have Zumba as well. Just so much going on in the venue next door. And we also have the lounge where we have on Thursday, we have ladies' nights. We have dance lessons from 5 to 7, 6 to 8. Then we also have on Fridays karaoke night. So if you want to come out and be a rock star right at this stage, you can come in on Fridays from 9 p.m. to 1 a.m. We have karaoke, and we also have our kitchen that, full menu closes at 10 p.m. But after that, we have a late night menu till midnight, and we have awesome entrees on that and appetizers. And then on Saturdays, it's basically the Latino night. So we have a DJ come out from 9 p.m. to 1 a.m. So not only does a DJ play all Latin hits, where bachata, merengue, norteñas, but also plays a little bit of hip hop, country, and some 80s rock in there, just to fulfill the crowd and have everybody excited and dancing and enjoying their hits. And then we also host live bands. Like, I don't know if you guys heard of any like Scan or Incognito or stuff like that. Like something around those lines we host. So basically, we'll put those in either Fridays
Insurance Gone Wild
or
podcast.
Saturdays.
Yeah.
Yes. Fridays or Saturdays, that's where we have our live music. And every first Saturday of the month, what we try to do is host Tejano night. So Tejano night, every first Saturday of the month, we try to reach out to a Tejano band to come out and perform, follow with our DJ. And, it's just overall, we just have so many things going on. And then we still have a restaurant where you can have a reservation for 20, 30 people. Even have your rehearsal dinner in the restaurant, have your baby shower in the restaurant, your 20th birthday, your graduation party, stuff like that. So we have plenty of rooms over there. We have an indoor patio, party room, our regular main dining room, and the lounge we have an outdoor patio. We just got so much going on, and I just tell people, just follow us on Facebook at Dos Amores Tex-Mex Restaurant, where we post all of our events, everything and anything, and that way you can stay up to date of what we got going on, especially how we have vendor pop-ups every month. That's definitely a chance for you to come check us out. That way you can overall just check us out. We have our brunch menu, mimosas, micheladas, Bloody Marys, our old fashions like you like. Mm-hmm. So, other than that, if you have any more questions, you can call us at 817-268-0404. Visit us at 209 West Bedford Euless Road, Hurst, Texas. And
awesome. Hey, this restaurant is a little hidden gem in the HEB area that not many people really, I should say, if you're in the HEB area, you probably know more about it. But if you're outside the HEB area, you may not know much about it. It is a great little restaurant. I eat here at least once a week. Every Wednesday at lunchtime.
For sure, yeah, once a week. So, I know you're here every Wednesday.
But yeah, it's a great place to visit. They've got again, like he was saying, they have different rooms where you can set up and have get-togethers, parties, or just if you want to bring the folks from your office here and everybody can go in one room, that type of thing. So, and we're meeting in the bar area right now and have everything set up. We have a number of people in here. So Anyway, we appreciate you allowing us to come in. This was something we've been wanting to do for a while, and we felt like it was the right timing for us to at least get started doing that. And you're our guinea pigs, Jesus.
Hey,
you're our guinea pigs.
That's okay. Just like that, we use y'all, for drinks. That'll be the beginning pigs for our drinks, see if it's good or not good.
That's right.
It'll be the same
That's
for y'all.
right.
Yeah.
That's right. That's right. So, anyway, let's switch a little bit. What are we going to talk about today? By the way, I didn't introduce us.
Not yet.
I did not introduce us.
I know. I've been giving you the stink eye the whole time.
Because we got to do it, right? We got to do the thing.
Well, I mean,
We got to do the thing.
we'll do the thing.
All right.
Let's do the thing.
So, I am your host, Dennis Settlemyer of Insurance Gone Wild, and this is my lovely co-host,
Stephanie Lencioni.
Lencioni.
What?
There it is.
That is not the thing.
Lencioni.
There it is.
Lencioni. I always say
That
it
was not the
wrong.
thing.
That's my thing.
This is, I feel like when I turn my head, right? Like
Well,
I'm here.
you gotta.
I know, but this is very,
Well, it's like your second job. I mean, come on. See, they got it.
I think we all got it. I just wasn't necessarily responding.
Even your husband's laughing. So he's like, hey, whatever brings in the cash, right?
We live a nice life. He's not complaining. We live a nice life. By the way, you're welcome and thank you.
Well,
So-
as typical, we usually don't have a script. Literally,
No. Yeah.
we don't have a script. And I think that's been one of the things that's made our podcast more authentic. We don't come in with, hey, we've done all this study, all this research. We
No,
just sit
we
and we
wing
talk.
it. We will make up numbers.
Oh yeah, we make up numbers. Yeah.
No, we won't do that.
No, we don't make up numbers, but yeah, we don't do a ton of research in order, because there's solid podcasts. They sit and they study and they got their notes
Oh,
and
they
everything.
prepare.
Yeah, they
They
prepare.
act professionally. That's not what we do.
But our podcast is geared toward consumers.
It is.
And that is the key when it comes to insurance. Because insurance, let's just put it out there. Insurance sucks. It sucks.
Yeah.
Everybody agrees it sucks, right? But you got to have it. The state says you have to have auto insurance, and if you have a mortgage, you got to have homeowners insurance. If you have a lease, you got to have commercial insurance, right? So it's really, really, who likes to be told that they have to do something, right?
What level are we rating this?
Well, we're talking about insurance right now.
Oh, okay. Yeah, nobody.
I get it.
Yeah.
I get it. So PG-13, right? NC-17, but
No.
we're going to keep
It's
it?
totally different.
Oh, okay.
NC-17 is way different than PG-13.
I know. That's what I'm
By
saying.
4 years.
Yeah, by 4
It's
years
a lot of
at least.
experience. A lot of experience difference. I think, and right now we have you guys, and you guys can hear us, and it's not too crazy because there are only about 100 in the room, which, sorry, you guys can't see on camera, but it's a tame 100 crowd. Do you guys have any questions?
Oh,
Huh?
we going there already.
I think we should.
So the thing I mentioned, I was
don't have a
going to go
topic?
with it it's geared toward consumers is that one of the reasons that we don't, and it's sort of intentional, we don't do a lot of preparation is that we don't get to prepare when a consumer asks us a question. So we have to kind of be on our toes and be able to answer questions. So yeah, if anybody has a question, except this guy over here, because I know who he is, and I know he's going to ask some hard question.
The
What's your
other
question,
99 of
Gary?
you
You got a
can.
question? Or are you just looking at me? So why would I need an agent when I could go on the internet and get it cheaper? Well,
That makes me want to drink just hearing that. I'm just like, oh.
good
And then when
gravy.
something happens, they will want to drink. 'Cause it's
Well, we
bad.
actually have addressed this in another
have.
podcast, so I'm going to go with it, and you can talk about it from your side. Here's the thing. Insurance companies love it when you go on the internet, don't they, Gary? They love it. And Gary probably knows why they love it, because Gary's from the insurance industry, and he's trying to stump the chump. They love it because they know that most people have not a clue how insurance works. So most people are going to get an insurance policy based solely on premium. and it's going to be missing a lot of very, very important coverages. For the insurance company, that's a good thing, right?
It is.
Why is that? Do you know why?
I do.
Go ahead.
Because when something bad happens, if you don't have the coverage, they're out scot-free, and they don't have to pay for
They
the claim.
don't have to pay. They get to save money.
Yep.
So they love it when you don't have an agent.
But to be fair, even when there is coverage these days,
Well,
they
there's
still
that.
don't have to pay to claim. So
That's a
that's
whole
pretty
nother-
fun. It's a fun game. Get an agent.
Yeah, that's a whole nother thing, right? Because, yeah, there are more and more. It seems like it's becoming tougher and tougher. They call it tightening underwriting. I don't know if that's really a
Are you
correct
saying
term.
underwriting or claims?
Well, claims too.
The
but
claims, yeah.
Underwriting. They look at
They
the
are
underwriting.
tightening underwriting, and I get that because you want to limit your exposure. I feel like I am in and out.
So I had a client,
It feels
or I had a prospect a number of years
Drink.
ago that had he had a nice home over in the Rockwall area, drove 2 very nice cars. He had a second home, a lake house on one of the lakes. It was a very nice lake. He had a number of investments and different things along those lines. The guy had some money, okay? He was doing, I don't know if he was a millionaire, but he was doing very, very well. And I was just getting started in the insurance business, and I asked him if I could look at his insurance, so he let me look at it. And guess what he had?
Minimum state limits.
Minimum state limits. 30,000. If he hit somebody, he would have $30,000 worth of coverage for their medical bills per person, or he would have 60,000 total for the accident. And so I told him that I would not. This is where you really have to be sure of yourself as a new agent, because I was brand new and we're hungry, really, really hungry, brand new, right? And I said, I cannot quote your insurance that way. And he was an older guy. He goes, well, why not? I said, because you have every asset you own in the front seat of your car without a seatbelt on. If you hit somebody like me, I will own it all. Or if you hit a lawyer, they will own it all. Here's the minimum coverages that you need. And I talked to him about the different coverages that he needed. He didn't buy from me. 6 months later, I thought, there's a way you could look up in some companies to see what coverages they currently have. 6 months later, I looked it up. He had the coverages that I had suggested, but with a different agent. A friend.
Oh man, I love that, and I also love.
It's okay.
It is fine, but
It's
here's what we
okay.
also love as agents: when you respect our answer or trust our answer enough that you're going to come to us with a question, but yet still have the business with another agent. That is fun. You know what I mean?
Yeah, I know what you mean.
That's fun.
Yeah.
Which is kind of what just happened there. He trusted what you were saying. And maybe it was the second guy that actually supported what you were saying. He was like, well, shit, I guess you're right.
Maybe he had been told
You know
that
what I
by
mean?
the
Like,
first guy, too.
That's what I'm saying.
He
Like,
could have. We don't know.
We don't know. And
That's
then
why
it
I
took the
wasn't.
third
I'm still
try or whatever
friends
it
with
was.
him.
Totally
I wasn't mad at it. It was just kind of interesting that I saw that.
no, I love that. though.
But
Love that
you
for
know, I've
love
run
that for him.
on the commercial side. I've run into things where I've found problems with people's commercial policies, and they stay with the same agent because the other agent didn't find the things that was wrong with it, that wrote it to begin with, and really, truly, I mean, we're bringing it up. It sounds like
It's not a
but I
whine.
don't like
I don't
it.
mean,
I
I don't mean
don't
to be a whine
mind
about
it.
it, but I'm
Yeah.
just saying it happens enough where everyone thinks it's kind of like if you like a friend who's a masseur, right? What do you massage therapist?
masseuse.
Masseuse is the word, masseuse. And they're like, oh, I don't know, my neck is kind of cramped. Do you think you can kind of get the kink out? They should be like, sure, book an appointment, done. Rather than like, I don't know, if you just rub right here, though, just get it out, just get it out. And that's what it is. We're the little fly-by-night, just rub it out right here, which I don't love the way that came out. But if you just rub right here, no big deal, it's fine. You know what I mean? And then, you guys can still book an appointment.
Is alcohol involved?
Right now or
No, I
at
mean,
my
just
appointment?
in your appointment,
Absolutely.
Brian.
He keeps me fully stocked.
I'm out. He doesn't know what happens behind that door. You don't care about, huh? So
Is he in the door with me or like behind the door?
no, he's not in the door with you. So
well.
anyway.
I'll tell you about it later.
So to answer Gary's question is that you need an agent to help walk you through, because an agent can sit and ask you questions that will help protect you more. The insurance companies love it when you go online. And if they like it, they should tell you right there, don't do it.
And I will just for a second touch on, coming from the consumer standpoint, everybody's trying to save money. Nobody wants to pay more for insurance. So if you are going to cut in certain areas, you just also need to be aware of where you're cutting. And are you aware of it, and are you okay with taking on that risk? So when you go online, you don't necessarily know that you've cut a coverage that maybe you're okay with, maybe you're not. But with an agent, it is a more clear, yeah, okay, I don't want that coverage. I understand the risks. Peace of mind, move on.
No, you're absolutely correct. Yeah,
That's insurance.
it.
The whole thing with insurance, you pay the premium for peace of mind.
I really thought Gary was going to ask a hard question.
I know.
I
But we
was
sure
really
did talk a
concerned.
very long time about it.
I was really concerned. What, do you got another one? You got another one? He's got them all night long. What you got? Wait a minute. What do we got?
Oh.
What do we got?
Hi there, long-time listener, first-time caller here. Why are my insurance rates going up when I haven't made a claim?
You know, that's actually a very good consumer-based question.
He's so hot. You know what I mean?
No.
Excuse me, sir, please book on my link, and we'll be sure to get the kink out. But for all of you who don't know, that is my husband, so thank you.
Have you subscribed to her Snapchat?
I don't even have Snapchat. He just gets this all the time. You know, he doesn't have to snap anything.
So why are rates going up?
You know what?
If you're making a claim. Come on, you know the answer. Why?
They don't even know, so I'm not sure why. No, we've talked about this. So it's going up for a lot of reasons. It's a pool. It's the law of large numbers. It's all the things. There are lots of different claims, lots of different natural disasters, and lots of things that they are paying. It doesn't just have to do with you and your history, but it's everything. And it's not even just, it's Texas. You have a lot of these insurance carriers that are nationwide or global, and so they're taking on everything, right? So a lot that goes into it. But what I will say, they don't know. It's bizarre how they come up with rates and how right now there's so much AI that's actually being put into the whole scheme of everything that there really is no rhyme or reason. And if you call underwriting, if you can get an underwriter, they're like, I don't know.
They don't know.
Or they'll try to give you some bullshit and you're like, sniff that out and that was wrong.
Yeah.
And they're like, but it's on my script.
Yeah.
We had two ladies, the exact same situation, basically. Both single, lived 2 miles away, homeowners, single cars. One car was a little newer because one lady had wrecked currently, like in her last premium cycle, policy cycle, had wrecked the car. And the other one had a also newer whatever. The one with no accident tripled. The premium tripled for her auto insurance. The one who had an accident at fault, it went down, I think, like $200 for the year. And they're friends. So they're both calling me and they're like, I don't really understand this. You know, so-and-so's insurance, that went down and she totally rear-ended somebody.
Yeah, there's so much credit. There's
I'm like,
so many different things that go behind it. I know when we were working for our prior company, that on the consumer side, there were like 300 different factors that went into it. On the commercial side, it was over 500.
I know, but
so
they
you don't know what it
they
is.
were samesies. They were samesies before, and her thing tripled.
Yeah, but there's a lot of that credit-based stuff. It also depended on what.
That's a hell of a credit
No,
drop.
I agree. They look at things like what magazines you subscribe to.
I'm just saying, like, it doesn't make any sense.
No,
It makes
I agree.
No sense.
I agree.
No sense.
It should be much easier to figure out. Because I have had that where I had a young couple that had an accident. Their rate was cheaper than a 40-year-old couple who didn't have any accidents. And I'm looking at this going,
Oh, is that with the old company, though?
yeah, it was with the old
Yeah.
couple. It makes no sense. Why would you not want a middle-aged couple with no accidents versus a young couple who you don't like young people anyway?
Could be midlife crisis risk.
Well, I don't know. Well, maybe.
there's like an
I don't
asterisk
know.
in there.
I don't get it.
Yeah.
I don't get it. So
I don't know. Yeah. So great question. Love that. Thank you for your participation. The answer is nobody knows. Nobody knows.
I will tell you that one of the things that's aggravating me as an agent is these companies, and I think I don't know if we talked about this on camera or off camera, but we did talk about it. These companies that are putting out these press releases that they've made so much in profit this year. And I know they're doing it for investors and different things like that. But
And they have to.
I don't know. Gary, do you know if they have to put that stuff out? You were in the
It's public.
they
I mean,
have
that's
to?
if you're a publicly traded company, that is public.
Yeah,
not
but
like they have to.
Allstate is a stock company. They need to put it out there because Farmers is not. They're not stock traded. They're a reciprocal. Yeah, but do they have to put it publicly? Well, it aggravates me because you get the phone calls and people are upset because they saw that, well, we made X hundreds of millions of dollars. We're so far ahead where we planned on being and blah, 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 blah. The problem that I have with that is I don't have a problem with them making a profit. That doesn't bother me a bit.
You want the profit.
I want
so they
the
can pay
profit
the
because
claim
I
in the
need them
future.
to be able to pay claims.
You need the profit.
What aggravates me is that people don't understand that they lost money for 2 or 3 years in a row. You know?
So I'll be that
And
person and say, did they?
I think a lot of them did.
Did they?
I think the company that you and I used to work for, they do so many little management fees and stuff like that, and they can still pay mothership $2, $3, $4 billion a year. They can't say that they didn't make money, but right?
I don't know.
Look at him; he's asleep now, right? They're paying mothership billions. You can look it up on mothership's website.
But that's part of expenses, though.
Well, for them, it's part of expenses.
Well, absolutely. That's just like a franchise, though.
$25,
Like
$50 pop, you know.
35.
So anyway, whatever it is.
I would always say, it's not me. It's the company.
It's crazy. All right. Any other questions?
Yeah, what else you got?
I don't know how far we are into this particular episode. Do you? 22 minutes?
Love that. Love that.
Wow. Uh-oh. Uh-oh.
Oh, we have one.
Uh-oh. Here comes Ricky.
2 questions. One question is auto insurance. I have a 26-year-old,
Sorry about that.
but he's a good kid. But why did it go up so? It's supposed to go down as they get older.
Yeah, but you forgot that it's 2025. That was the problem.
It does not. That is.
It should have it 25 for them, right?
No, that's not around. That's not around anymore. It hasn't been around for years. When we were growing up,
Yes,
it was
it
25. But at some point in the last 10 plus years, that doesn't mean anything anymore.
I've been waiting forever for it.
Yeah, it won't go down.
I mean,
Now, at 25, you might be able to put them off on their own policy.
he's still in college.
And, well, that's okay. They're 25 years old. It's a contract. They're legal age to sign a contract. It might go down if they're on their own because you move them to a different company. Yeah.
And depending on your limits, that may be where it makes sense to. So I was talking to somebody today, actually, $1,400 a month. She has two sons. One just graduated high school, and one is a junior or senior in college. So we're talking like 18, 19, and 21-ish, right? He's definitely 21, so maybe senior in high school or college. $1,400 a month. A month.
How many accidents do they have?
None.
They had no accident.
None. She even has hail damage on her car and is like, I ain't claiming that shit. Like, I can't afford my claim to go up. And I was like, well, that's where I would actually make the claim. And if you're cool with having a dinged up car, then pocket the money, help fund your insurance for the next few months.
Yeah.
Because that's not insurance fraud. You can make a claim, and as long as you don't, where fraud
the
comes
claim
in,
twice.
side note on this, where fraud comes in is where you try to make a second claim, like multiple claims for the same damage. But then so back to this, I was like, well, have you thought about splitting them up? And she's like, we have tried it every which way. It just doesn't work. It's $1,400. This is the best. But with yours,
to
but it's
call
not
us.
for everyone in that case, right? So for your situation, not knowing what your limits are, because if you and your husband and your family no.
Just me and my son.
Oh, okay. So if you're carrying higher limits, then maybe you can get your son on lower limits and save. But if it's not a significant enough savings, then I wouldn't risk it, and you guys just stay on the same policy. If you have lower deductibles, we can talk to us about deductible reimbursement programs. So it lowers your actual premium with the insurance company, and then you come in with a tiny policy in the back end. So if anything happens, then they'll cover your deductible for up to $1,000. And by the way, they will also cover 20% of any repairs, which also would have come in handy for this woman because her son's, the one in college, the fuel pump just went out, and it was $1,400 is what he's getting quoted for that, which is a little on the high end, but I was like, damn, that is high. So ChatGPT to the rescue. And it is in line of like reasonable, everything is going up is the point, right? Everything is going up.
So which one of the folks are going to give her a call to talk about a $1,400?
I mean, I just want the commission on that.
He's here. He's here.
No,
Does he need to
did
look
you
at
hear
it?
me? I want the, I'm just kidding. I'm just kidding. I don't do home and auto anymore. But that's what I would look at. Is there a significant enough difference to justify putting him on his own?
Yeah, that's what
But
we're
if
looking
you're
at.
The car's not, it doesn't matter, right? He can just.
No, that's fine. Because what they're going to end up doing in the claims process, let's say that he's on his own policy, because this happens all the time, right? Like, you bought the car for him, he's younger, it's in your name, blah, blah, blah. And let's even say he was completely gone, you're over here, he's on his own policy. If an accident happens, it gets totaled out, the insurance claims department is going to look up who the registered owner is, and that's who the check of the vehicle is going to go to. So that would be how you stay protected if it's yours or what. It doesn't matter, whatever. But yeah, that part doesn't matter if
And
he's the one driving it.
What are the pros and cons of, say, this is for my older son who has a home, getting their homeowner's insurance with their auto? Is it a good idea, or sometimes it's not, or combining?
It just depends. I would say
Because sometimes he's going up and down, like it was a good idea this time, but then the next time.
10 years ago, even probably 5, I think it made a lot of sense to look at bundling. It just doesn't make
Not
sense anymore.
I was actually talking to a lady today about that. She's with a particular company, and
Thank you, ma'am.
she was a realtor, and she's with a particular company. She goes, yeah, I'm bundling it with so-and-so, and I'm like, oh, you got a good deal on the house, didn't you? She's like, yeah. I said, but you got screwed on the auto. She goes, oh, the auto is so high, but they wouldn't give me the house without the auto. And I said, well, we don't have to do that. We can split them up if it makes sense.
If it makes sense. But these days it does. It seems to make more
More
sense.
and more times it does, yeah.
Seems to make. And that's the thing, too.
Well, let me tell you, the other thing is that I think the state of Texas passed something that says you cannot force people to bundle,
Oh, so
like here in August or something. So when they did that,
that
it's
changed.
like, whoa, that really opened it up.
yeah.
But I think they knew it was coming because more and more companies started backing away from you have to have both with us. There's goods and bads about that. The companies want the premium, right? So if I'm a consumer,
Well, they want the premium because they
want
need to
the
absorb
premium for both.
Yes.
but now if they don't know if they're going to get both, they can either give bigger discounts for both, or they're going to raise rates on one or the other. So it's, I don't know if it's good for the consumer.
Oh,
I don't know. In the long term. Right now, yes.
Yeah, but when they were forcing a bundle anyway, you were still getting screwed on one of them.
Yeah, but of course, TDI has to approve rate increases and things like that. If they feel like that they're doing that because of that, then they might not always approve the rate
Excuse
increases.
me, there's an attractive woman who's eyeing you, and I think we need to address that.
Oh, hello. Well, hello. How are you?
Is this on?
It's on.
Hi.
You have to get really close.
Okay. So seriously, have you talked about homeowners insurance in North Texas yet? And when is it going down? And I know it's never.
You know, that's a great question. I was hoping there was a guy going to be here named Chris. Chris is not here. I think he's going to come. Chris is with ISG. They are, he talks to a ton of different homeowners companies, and I was going to pick his brain on that. It seems like, it feels like to me we're starting to finally see some slowdown of increases, but not stoppage of increases.
Can I chime
Just
in?
slow down. Hey, listen, I took care of you. I saved you $2,000 a year after you complained for 6 months on the air about how you.
I was paying $6,000 a year.
I saved you $2,000,
Finally.
and I think I saved you some on your auto too.
Finally. The hell are you good for? Anyway.
Ask her, the lady asking the question.
I know. She's actually, I see her. She's registering for your link, but that's fine. She's got a little kink as well. But I always think it is so adorable. When we first started this, Dennis was so excited. He was like, oh, I just really, 2025, it's coming down. These rates are coming down. It's our year. And I was like, woo, that is, here, roll the tape, Paul. Just kidding.
If I ever said they were coming down.
Oh, you're like, it's going to get better. It's going to get better. And I was like, you guys are adorable. And I even mentioned Chris, who's going to be here later, hopefully. You guys are so cute in the PNC
probably going to prove me
world,
wrong.
where it's like, there's total hope on the horizon. And I'm here to tell you, there's not. You should just get another drink. There may be slowdown, but it's not coming back down. It's not going to go back. It's just like COVID stuff, right? Like you have lumber that shoots up and it comes down, but it never fully corrects. It never goes back to where it was.
Oh no, it's never going back.
And then you have so many things. You've got
plywood never went back down. We were chopped to $100. It didn't go back to $10, $15 a sheet. It's still $20, $30, $40 a sheet.
Yeah, I don't know how much it is.
You don't know how much it is?
I will say one more thing
I
because I just have to. The fact that my mortgage payment, 2/3 of it is for property tax and insurance.
Yeah.
And 1/3 of it is for my home.
Is the actual mortgage?
Yeah.
Actually is ridiculous. So
Okay.
not sure there's anything we can do about that, but
Okay, that's a really good point. So talking about that this is for consumers. So people who are looking to buy homes and everything else, I thought for sure there would be a whole lot more foreclosures coming up with everything that happened in 2020 and 21 because people were they were putting down $50,000, $60,000 over or offering over what asking was. And we were shopping at the time and we offered 75 over asking on one and we were not even in the top 5. And then I thank God because you kind of kick yourself and you're like, well, that was dumb. That was pretty stupid. But it was just this like, oh my God, you just get mixed up in it and you have to, whatever. But that is where I think people are going to lose. Like, hey, I can afford. So when buying the house, this is where I'm going with this. Sorry, I squirreled. When buying a house, I squirrel a lot. Think about 5 years. If you don't get a raise, right? Because how many companies are now there? And even if you get a merit increase, we've talked about this, where maybe your benefits actually go up. The cost of your benefits is going up. So you get a merit increase, but the cost of your benefits is going up so much that it wipes out completely your merit increase, and you're actually at a loss because everyone's feeling it. You've got the tariff thing now. You've got a lot of different variables, and companies have to give somewhere. We've talked about this. It's people, it's payroll, and it's insurance are your most costly things as a company. Or just being in business with Dennis. But it doesn't matter. That's a side note. I'm kidding. He's amazing.
I'll be in business with her. I can't keep up with the alcohol bills.
He'll toughen up. But so thinking about when people are buying the house and they're like, okay, I can totally make it. And they're like, those mortgage guys are playing those numbers and they're like, oh, they make the ratio. They're right there, 42%. Yay! They're not going to be able to afford it next year because taxes are going up, insurance is going up, groceries are going up. I can almost promise you their disposable income is going down, even without all of the other factors. So you just tell your young people, tell your people who are trying to move, and they're like, oh, shit, I can make a ton off my new house or off the house I'm living in, and then we'll just buy a bigger and better house. That's amazing. The taxes will never go down in a way. The insurance will be expensive. It's things to think about. It's that extra step, right? It's taxes and insurance. They suck. But you got to pay them. Thank you, ma'am.
thank you.
Wow.
Did that make sense?
Yeah, it made sense to
Okay.
me, but now I'm depressed.
What did you say?
I'm depressed now.
Well, yeah,
We have young
I'm not
people
just
that-
here to drink, baby. You know?
We have young people in
I mean, I
here
am
that were
here to
thinking-
drink.
wanting to buy a house, and now it's like,
Nah, don't do it. I'm not saying don't do it. Plan ahead. Have a roommate.
yeah,
Yeah.
have a roommate.
Be ready to sell something you didn't necessarily plan on to begin with. You know what I mean?
Wow.
We can help you set up your online link as well. Yes. Thank you. Yes.
Like a podcast.
Sure.
Right.
Sure.
We have somebody sitting
Oh.
over here in the corner that can help with that.
Yeah.
So,
Anyway,
you think we know how to do all this stuff? We're just the talking heads is all we are. So, all right. Any other questions? If not,
Oh,
you
we
got
got
a
one.
question? All right.
we got a lively bunch
Oh,
here.
we got another question.
Remember, get close.
The first question is from somebody in the audience. They wanted me to ask it. Say there's a 21-year-old driver. She is kind of broke. She just moved into her own apartment. Should she have the lowest limits for her auto policy since she has no assets? Second question. If I own a bunch of properties, should I just put them all on one policy?
Wow. That was a lot.
All right. So the first question we actually addressed when my nephew was here. We have an episode of him, right?
Yeah, okay, so I'm going to take that one, and
Go
you
ahead.
can take the other one.
All right.
Because that's more your jam.
Okay.
But, you know, I just want a chance to talk because he's been muzzling me this whole time. Hey! Hi! Friends are here.
I'm glad you've got some.
Well, thank you. Okay, so for the first one, the 21-year-old in her apartment, here's what I would say. What are the two words we always say?
It depends.
It depends. So, what?
I got it right. I got it right.
He got it right. Nailed it. So it depends. Can she afford higher coverage? Does she have accidents? Is her credit crap? Is this like all of the different things? What does the disposable income look like at the time? Because if you can, it's not just a yes or a no, right? We have a place where a minimum that we want people to start. And if they have to go below that, we will, that's fine depending on the circumstances. If we have the almost millionaire, not sure if he's a millionaire guy who's rolling around 30, 60, 25 state min, we don't want that client. We have a 21-year-old who is just trying to make it and do what's right and cover insurance and do the things. We're fine with that, right? But the conversation is, hey, I know this is the best that we can do right now, and this is all that you can afford. We're going to revisit at renewal. Where are we? What's going on? And then the next one, we're going to revisit because the goal is for us together to get her up to be protected because God forbid something happens and then she rolls into said maybe not millionaire. She'll never have any
Lawyer,
assets.
yeah.
Anybody, right? A surgeon or anything that happens,
Yeah.
then
I
without
would-
having proper coverage, they'll
I would
make sure
tell
she
ya-
never has assets.
I would still probably try to get the next level up
That's
because
not what I'm saying.
the premium jump between state minimums and the next level is not very much. So I would probably try to go the next. But I would ask them and I would explain
Again-
to them, can you afford the extra $5, $10 a month?
And I'm here to tell you.
Sometimes they can't.
Some of them can't.
And that's
It is-
okay.
It is crazy.
Yeah,
It's crazy.
yeah.
Anyway, but yes. Again, it depends. Like
And-
we're not chomping at the bit to do 30-60.
Yeah,
We don't want to do 30-60.
no, we don't. Because it's
But
not
if
good
we
for them.
have to because they can't eat for a week because we've gotten them better insurance coverage, like
Yeah.
that's also
No,
not
I get
feasible.
it. It's it's ultimately the client's decision. As far as putting a bunch of rental homes or properties on one policy, again, it depends. It depends. There's got to be a reason for it. There's got to be a reason against it. We have one client who we have a number of commercial policies with, and I mean a large number of commercial policies with. At one time, they were all on one policy. That's not good. And they were paying about this much a year. I came in and explained to them, this is why this is not good. You have one bucket of money. If you get sued, all of them are on the hook. So we divided it up, and now they have like 60 policies with us. And they're paying a whole lot more in premium, but they understand why. So it depends. If you have a bunch of rental homes, maybe you can put all them on one policy. Maybe there's a way to do that, and it makes more sense that way. So
You guys have-
the
we
thing
have
is, it depends.
Yes, it depends.
It depends.
Ask us any question, and the answer is it depends. Spoiler alert.
Yeah.
But there's the one. We have the one client who had the 6. Like you have to have a minimum of 5 rental properties to put them all on a policy, and that
Well,
made sense.
that particular company, yes.
All I'm saying
It depends
is
on the company, yeah.
Yeah.
It depends. That's a good word for insurance agents. It depends.
hashtag. It
All right.
depends.
We got one more question, then we're going to take a break.
I love that.
Okay, so my question's actually about health insurance.
Yes. Gosh, I love you.
I'm out.
Bring it.
So I'm gonna start off by saying I'm 25. I make roughly 43 grand a year before taxes.
And what is your social? Sometimes they ask.
One question is my only option to go through this marketplace? Like, I genuinely don't understand health insurance at all. And the second part is, why the heck am I paying $350 a month plus copays? It's insane.
Yes. So again, wow, that's a lot. And I would like to refer back to the initial statement that I believe we opened up the conversation with. Do you remember it? It was 2 words. Insurance sucks. So if we just remember these things, then I think you're gonna be on track to really get it. It does not make sense. So no, your only options are not necessarily healthcare.gov, right? There are a couple that probably, just knowing a little bit, obviously of your situation, that is the one at this point in time that makes the most sense because of certain things. And by the way, that $350 that you're paying this year in 26 will probably be a lot higher because
year.
of what is being implemented and everything and all of the adjustments
Like, a lot higher right now or a lot higher next year? What do you mean?
next year.
So
It,
it's,
w- it
it'll
will
increase
it will
next year.
most likely, I can, like in your
Well,
situation.
that doesn't surprise me, but
Yeah.
I think we're going to find out that the big, beautiful bill wasn't all that beautiful.
Well, here's the thing. Any disruption,
It's a disruption.
it's a disruption, and it's change, and so not everybody can win from it. I think the intention behind it is to stop the people from who shouldn't really be getting these subsidies.
The abuse.
It's the abuse. Stop the abuse.
Yeah.
But in the process, there are going to be people who are going to be hurt by it. And a lot of people will be hurt by it. A lot of people will be helped by it in different ways and things. But yeah, I think it's going to get worse. And then and then the copays. I mean, there are a lot of people who pay a ton of money. They don't get any, no subsidy on healthcare.gov, and then they have no copay. So they walk in and it's like, hey, cool, here's $150. By the way, and thank you for your $3,200 a month premium. Yeah. And that's before a doctor walks in a room.
And
That's why you still get to wait there for an hour.
It seems to me that health insurance industry is slower to respond with new programs than P&C, the property and casualty portion is, because there are companies that are coming up with new programs
Okay.
to fill gaps and do things differently. Healthcare doesn't seem to do that.
Okay, because I don't disagree with you, but you have to think of what healthcare is doing and who it all affects. So they change one thing in health, like ACA, that took a long time, which again, great move, government. But
Yeah, that screwed everything up.
it's
Whether you like it or don't
awful.
like it, the reality is it screwed
and you
things
can't
up.
put the genie back in the bottle.
You cannot.
That is the biggest thing. So that's why now they're trying to shift the genie, maybe like take the analogy, run with it, whatever. But like there's disruption and people are going to get impacted by it. But because of how federal health insurance is, of course it's small. It takes a lot longer.
Yeah.
It's a much slower moving game, and so many other things have to be. I mean, it's dealing. This one big beautiful bill act is impacting the country.
Yeah.
I mean, it's not like, oh gosh, well, there's the new auto coverage, and like, there's this new company, and like, maybe I'll go with them, maybe I don't. I don't know if they're going to pay claims or not, but we'll see.
Yeah.
It doesn't affect everyone. It's a very small group
Sure,
of people opposed
sure.
to a new health insurance. It's everyone.
Yeah. Yeah. No, I agree.
Thank you. See,
All right.
it's on record.
We're gonna take a break here for a little while, but for those that are watching via recording, if you guys have questions or comments, as always, please reach out to us.
Oh, yes.
Contact at igwpodcast.com or give us a call, 817-753-0093. We'd love to talk with you guys, answer questions, and we'll kind of go from there. But thanks a lot.